Good afternoon, everyone. This is Wilmer for us, and today we will be talking about major trend reversal. And we're going to know how to trade it properly, and we will be recognizing many patterns where we can determine reversals. So there are many criteria for knowing reversals, and today we'll be covering it. We'll be using many indicators, Bollinger Band. We can use also Ichimoku, and we can use MACD and price rate of change, as well as the Bollinger Bandwidth indicator. But before beginning my webinar today, I'm going to remind everybody that Forex trading is a high risk business. So do not indulge in this business if you're not well trained and in trading psychology, in market analysis, and in risk management, especially on risk management. So in this business, if you do it right, money is easy for you, but it takes really time of uh, hard study and practice. So the number one thing to be successful in forex trading is you have to regularly do your practice. All right then. So I will be beginning with my discussion with uh, major trend reversal. So at first, I'll be using my trading view um, for checking all the reversal that we can see on the screen. So the first thing that we are going to do is we are going to recognize like M pattern and W pattern. So we will not be, at first, we will not be using indicators. What we're going to do is pure price action and candlestick patterns. Then we are going to confirm it with indicators. So indicators will help us confirm our uh, entry if it is really high probable, uh, especially with divergence, with the price rate of change, and the Bollinger. Now, Bollinger signals, there are many signals in Bollinger like squeeze and bulging. So in squeeze, that's the usually the beginning of the trend when there is a breakout. And I will teach you how to do it with the Bollinger Band as well. With two indicators, you can use the Bollinger Band Web and the Bollinger Percent Band. So, and with the price rate of action, rate of change as well. We will check also Ichimoku how to see a reversal pattern, because in Ichimoku we'll be checking the N wave pattern, and usually N wave. Then when that N wave will not be broken, it will be making like uh, A to B, then C and D. It keeps making lower low, lower high, lower low, lower high, lower low. So we can therefore say that there is a reversal of trend in that particular things that happen. So I'm going to share my screen. We'll be analyzing GBP USD. We'll be checking all the reversal pattern in GBP USD. At first, we'll be checking M variation and W variation with pure price action, without any moving averages, without any comma, and Bollinger and Ichimoku. All right, I'm going to share now my screen. Okay, where's my screen? I didn't see it. I'm going to check my web browser. Yeah, come on. Just a while. I'm going to refresh my web browser so that we will know how to determine the M and W pattern. All right, then I'm going to share my screen. Share my screen with Bollinger Band. No, with pure price action trading. Where are you? I didn't see. Come on. Okay. Ah, yeah, it's here. Okay, you will now see my screen with the Bollinger Band. I know, with pure price action first. We'll just use trend line in determining the trend reversal. Let me close all the other. Uh, just for a while, I'm going to close other. Okay. Okay. Yeah. And close my other. But it anyway, it's performing better right now. So I'm sharing on my screen. We'll be using trading view. So I'm going to remove all the indicators, the SARs, and many of them. So as well as the Bollinger Bandwidth. And all right, so let's begin our analysis with major trend reversal. Let's begin in daily. What we can see, we'll be looking for the W pattern and the M wave pattern. In N wave pattern, we can see head and shoulder, and in W, we can see inverted head and shoulder, and in M wave, we can see double top and reversal, and then we can see in W pattern, we can see like double bottom. So double top and double bottom. All right. May let's get your phone. It's noisy. Get it. Okay. All right. So I'm going to delete all my screen. Then I'm going to change to daily time frame. Okay. Erase all the drawing. Okay, I remove all the drawings. We'll look for the M wave pattern. So we will begin from here. Okay. All right. Okay. This is a good reversal here in this location. In this location, I'm going to mark for you the M wave pattern for reversal when the price was from here going all the way up in daily. So as the price went up, you can see here that the price did not make any higher high, and in this level, we will mark this one. See, the momentum is slowing down. Slowing down. And you can see here M pattern, the big one and the small one. Because this one is a signal that the trend is almost reverse. See that one? Double top, double top. So in this location, we can see M pattern. I'm going to show you the M pattern. I'm going to make it a little bit slower, a little bit, so that it will be clear for you. All right. So clearly there is a double top. So it's a good sign of reversal. Please go out, please. Please go out. Nobody will be here. Come on. Please go out. All right. So the M pattern that you can see here, a clear M pattern, this one. So I'd rather use trend line so that it will not be disturbed. M pattern. See that one? This is an M pattern reversal. So when the market will be forming M like this is a pattern for reversal, and you can see it here that the market from here, it was able to break it here, make a higher high, and this movement will be a a climax move. You can see there that the market tried to move up and it tried to test this resistance, that it was not able to test that resistance. As you can see here, it is strong. Then you can see double top. Then the market made a lower low and lower high, tried to make a higher low. Instead, it turns into a lower high. It makes a lower low here. Then in this location right here, we can see that in smaller time frame, there is a small trend. You can see that here. If we're going to understand this one, in smaller time frame, there is a trend that is happening, because in every time frame there is a smaller time frame. So in higher time frame, that's a long-term reversal or trend, and in small time frame are creating their own, also their own trends. So in daily, we can understand that in daily, um, this is the big trend direction, but the market failed to make a higher high in this location, and there was a strong retest going to the demand area. You can see it here. This is a zone, a congestion zone from here. So this is a good support area. You can see it here that it didn't hold, and the market moved all the way down. So we will follow this one, and we will determine how we are going to attack with major trend reversal. In this reversal, we can have many strategies here. So we can see there is an M pattern. So as the market um, went up high in this location, I'm going to erase this one. We can see many candlestick pattern, because candlestick pattern will react first before the whole pattern itself. So in this location, we can check many trend lines that uh, we can attack the market for the reversal. But anyway, as the market, you can play around here if you'd like to do scalping before the reversal will happen. But in this location, you should watch out this area as the reversal level. So in this area, I'll be doing trend lines here. See that this is a trend line, right? Because market respects trend lines and horizontal lines. So we can see it here. So this is the best way to do the trend lines from here. So in this location, you can see that market is respecting this. This is the perfect one. You can see it tried to touch this one. You can see here 1, 2, 3. You can see there a high one. So actually we can play around in this area. So 1, 2, 3, you can attack it here. Going up, you can see there is a morning star. And you can attack all the way up. And here you can see there is a dark cloud cover. You can attack that all the way down. Here we can see here first line. You can see that one, first line. Then it move up. Then in little analysis, you can analyze this as support it here. As the market will move up, you can see support. And here you can see support. This is micro analysis of support. These are support, minor support that we can play around. Look at that one. Look at that one. So there are many support that we can play around with the market. And I'm going to erase that one. So there are really many things that we can do here. We can attack these lines, intersecting lines, right? See that one? So that's why it's really important that we are going to look at our chart when there is a trend line. It's almost touch the trend lines like this. So as the market went up, you can actually make a trend line here for this reversal. See that one? This one? 1, 2, 3, each one, each two. This is each one, low one, low two, low three, meaning to say low one, the first attempt of bulls to go down, then this is the second attempt. A third attempt, usually a reversal movement of the market. So you can see it here. This is very confluence in this area. You can see this is the zone. I'm doing the zone right now. So novice will be trying really to attack this area. So if you're a novice, most probably you'll be entering in this area because this is actually a resistance zone. Because we will attack the Forex market in a zone. So that's the zone. And what happened when you're going to attack the market right here? You'll having your entry over here, and your stop loss will be right here, and entry right here. What happened? You are stopped out. Why? Because institutional traders and big players are really good in stop hunting strategy. It's not actually the broker that hunt our stop loss. That's why we need really to locate our stop loss at the right location. So in this area, this is the area. You can see it here. that this is really a strong resistance, because if you're going to draw trend lines right here, come on, see that one? Hmm. Horizontal trend lines. See that one? There are many trend lines that are intersecting. So meaning to say, this area here is a very interesting area, because you can see this is a junction of this trend lines and this trend lines on the double top. So you can see it here that there is a harami, right? This is a this is not a harami, but this is a dark cloud cover. So dark cloud cover candlestick formation, almost that the this next candle is closing 50% of the previous candle. So what you can do in this location, to attack this one, is stop loss here, sell stop. You put a sell stop one tick below this signal bar. Your stop loss would be like above this area. To help out with your stop loss, we can actually put like parabolic SAR. That also can help us with our stop loss. You see, if we are going to enter at this location, you should really follow your stop loss on the SAR, and certainly that SAR will not be touched all the way down. You can see this is the purpose of the parabolic SAR. So your stop loss will be always above the parabolic. As you are going to trail down your stop losses, I'm going to change the color of this one into settings. What color? Red. Yeah. So this is my stop loss. As the market will move one candle, move your stop loss following the follow break stars. So this is one way on how to attack the market. So we can certainly say that this area is a important um, reversal point. So this is a major reversal point as I show you the M pattern that is happening. So this area is really an important uh, reversal point. And you can see I can make many trend lines here. It will be break by our this is a trend line. You see that trend line? It is broken, and this is also a trend line. It was broken, and you can see this is a good stop loss location. So it is being violated. Trend lines are being violated. So meaning to say the market is really turning around. So this is an M wave pattern for uh, having major trend reversal. All right, so this is our low risk entry. Okay, I erased my drawing with the trend lines, and we will put a Bollinger Band. Let's see if what the Bollinger Band will tell us as we attack this area. Let's see if there is, yeah. You can see here there is a double tap on Bollinger Band, and it's very clear that Bollinger Band is making M pattern. This is the M. One, then move down, move up, then move down. But actually, the perfect one is the one that I draw. Okay, this one. See that one? That's an M pattern. So this is one. So it forms in many ways, but this is one of the variation. But as we go and explore the market, we will see many M's right there. And we can see here a squeeze already in our band. Squeeze, and the squeeze can be checked. And there is a fake out. You can see here, fake out, 1, 2, that's the band, 1, 2, and this area is a good location really for selling entry. You can see here that as the market touching the upper band, you can see it there that many candlestick formation happen, but never take really the second touch. Always take the third touch, because third touch is always the most productive entry point. As you can see here, we will be checking all the way down here if what we can see as the market will move down, and as well we will be looking for the pullbacks as the M wave changes its location, and after the M wave you can see N wave will be moving downward. We can say it's as an ABC pattern, and you can see it here. It's really very strong reversal, because look at the pullback. Actually, very slow, implied pullback only, because this previous candle was not being violated. So we cannot see really this is a pullback, but the pullback happens right here at the breakout point, which we might lately from here. From here, this is the breakout point. See that? So in Bollinger Band, you can see there's a squeeze, but let's check if this squeeze will be confirmed by our Bollinger Bandwidth. Check it. See? So the squeeze happened. See that one? That area here? Meaning to say, when the Bollinger Bandwidth is in the lower portion, meaning to say this is a squeeze from here all the way up here. So if you're going to check this area, this one, this low, and okay, you can see it here. Look at the one. See the one? This area here is a squeeze in the Bollinger Band. See that? And you can see that in this location as a whole, the volatility is not really as strong as it is. So the volatility in this location is really not strong. So as the bulls happen, you can see it here, and you can see here as the market try to change the angle on the Bollinger Band, well, you can attack in this location and hold your trade all the way down here. Look at this area. And as the market reach this area, you can see that the Bollinger Bandwidth is decreasing its momentum. So you can see here that the market was making a channel down. You can see also that the volatility in the Bollinger Bandwidth is decreasing as well. From here, going down here, from here, you can see that one, descending channels, right? And after that one, you can see increase of this is a bulging again. You can see Bollinger Band is bulging. As you can see as well here, you can see here a Bollinger Band walk. Then the market moves up, down, ranging, but the direction is going down. And you can see here there is a band with walk. All right. So that was very clear in this area that the Bollinger Band is making what? A bulging formation. In this location, it tries to do a squeeze. And in this location, you can see, so you can attack the market high, the lower high, enter, lower high, enter. And plus, we can put the Bollinger Band. See this one? This is a Bollinger Band percentage. Bollinger Band percentage band. Okay. So you can see it here that look at this area. Signal for selling, right? Look at that one. Selling. You can see it here. There was a divergence. So look at the from here. So 1, 2, 3, 1, 2, 3 touches divergence. So this is really a good short entry for short. So this is how to use the Bollinger Bandwidth. And always remember, because we are using the moving period on our Bollinger Band, 20 moving period. So you set also on your Bollinger Bandwidth 20 moving period, as well as Bollinger Band percentage B 20 moving period. So we can see it clearly here that it's moving like that. All right, so let's remove our Bollinger Bandwidth so that we can see clearly the market as it moves down. So in this location, all right, we can see it here. This is a zone from here going there. Big zone actually. So that is the congestion zone, support area, and resistance. Move it right. You can see it here. The market. This is the interesting part. The market try to test this zone as well. This is the congestion one. These are the congestion zone which serves as support and resistance. So this is a continuation pattern, as you can see from here. As the market move all the way down, you can see N wave is happening, right? This is an N wave. Let me erase all my drawings so that it will not be confusing. And we'll make it smaller. All right. So N wave. See that one? And right here, see this? As okay. So as the market moved to this location, you can see here the W pattern. So this is not a major reversal. As you can see, the market reverse. So this one, W, O, W. So you can attack this uh, area, and as you move forward, what happened? Sorry for I'm very and not so. Move forward. You can see here M pattern is forming again, and so down, down. But as it moves right here, you can see here W pattern, right? W. So this is how the market will reverse. When you can see like that, that one, that's W. And but this is not a major trend reversal. These are just minor, not like on the other thing. See that one M pattern was forming. So M, this is an M pattern. And see that M pattern. We can call this as well as head and shoulder. As I mentioned, this is not a double top entry, head and shoulder reversal pattern in Western pattern formation, right? See that? Here we have also head and shoulder, but not so perfect. Left head, right head. This is the head with the M's, right? This is not a double top. This is the head and shoulder pattern. As in this location, we determine that there is a W, right? We can also see head and shoulder pattern, right? There's an overshoot problem, there's a news, but this is an overhead pattern. How we can attack in this location? We will attack really on H3. See that one? Let me erase my drawing. Trend line, high 1, high 2, high 3. That's how very effective high 3 is. So first attempt of the bulls to go up, second attempt, and the third attempt. So attack it here. You cannot actually put entry or buy stop order right here. You can do it like this. Stop order and stop loss. And then see the market is moving upward on each high tree. So in this location, look at this. Low tree is forming. Low tree meaning to say the bear attempts to bring the market down. So you can attack at here. Leave your stop loss here. See that one? First attempt of bear to go down. Second attempt. And the third attempt. So these are all reversal, but these are minor reversals. Pattern. So as we go here, head and shoulder pattern was formed right here. See that one? Head and shoulder pattern. And M is forming. See that? M pattern. As the market went, all right. As the market, okay. Sorry for that. I'm going to erase all my drawing from time to time. So as the market move right here, you can see here in pattern. After N pattern, we can see W, N pattern, N, and there is W, right? W, W. So this could be a major trend reversal in this location. See this one, 1, 2, 3. Even just looking at this one, you can see low 1, low 2, low 3. With the low 1 and low 2, a high 1, low 2, low 3 actually, sorry for that. So the market here making a breakout point, and you can see here that this is a good support area. Good support. See that one? That is a support area. And it was tested and the market went up. And as well, the Bollinger Band is right here. So as well with the 1, 2, 3 pattern that we have, 1, 2, H1, H2. So it's good area to attack here all the way up. So we can see it here, there is a W pattern, right? Head and shoulder, head, all right. This is the left shoulder. This is the head. This is the, so this is a squeeze. If we're going to put another Bollinger Band here, come on Bollinger, let's check Bollinger Band as well. I have already a Bollinger Band here. Sorry, I have already a Bollinger Band, but I remove only the bandwidth and the percentage bounce. See that one? Signaling up, signaling up, signaling up. You can see it here. There is already a divergence, right? Flat it here. In this location, signal bad. This is a bulging pattern, so the market will be really going up here. And you can see here another variation of N pattern. This is an M pattern. And so as you can see, the market is really, and a bigger pattern of head and shoulder. Head and shoulder. Head and shoulder pattern right here. As you can see, this is really a nice area because the market was ranging in this location. You can see big players move up, and you can see here a signal entry bar. You can put here sell stop, and then the market move all the way down. Okay. See that one? All the way down. And as the market tried to reverse this area, one, so this is a new W pattern, as you can see. That one, W pattern, right? But you can see it here that the market there was a squeeze and there a selling, and then you can see overbought, no, oversold in this area. No, yeah, oversold, and the market right here changes its angle with the Bollinger Band percentage. So you can have another entry in this location. You can see it here. But if we keep on our time frame in higher time frame, our entry will be right here. So our stop loss will be here because the market is really high volatile in this location. Stop loss, you can see our stop loss is really wide in this location. So in order for us to reduce our stop loss, then we will change to, let's check this area in H4. H4, mark that area. Where is it? Okay. Yeah, there it is. Yeah, in H4, it's clear a W pattern, right? But we cannot see it. It's a perfect W pattern in daily. So that's why we need really a top-down analysis for our entry. We can see it here, W pattern, right? Triple bottom with a W pattern. So in H1, H2, H3, we can have another entry on H3, right? Close to the Bollinger Band. And if you're going to look at this area, look at it bolts, it weakens, momentum of bear weakens, and you can see very clear on there is a divergence, right? As this market is flat, look at the Bollinger Band percentage B is making higher high. So in this location, this is really a good buy setup, right? So stop loss here below the band, that's the right stop loss, or you can follow the parabolic star. So your stop loss will be below. You can see it here. As you'll be attacking this market, you can have your stop loss here below the Bollinger Band. As the market will move up, you can follow it. You move your stop loss right here, right here. As it moves up, so you can see that the market made a, so this is a take profit location, and you can see this is a breakout point. See it here. So this is really a take profit location. Breakout point, right? That's a breakout point. So, but if you'd like to trail your stock, because we can see as the market went here, you can see parabolics are forming. So meaning to say you can follow parabolic as your stop loss. Move up here as the market move up here. You can see the parabolic SAR is giving us a good stop loss location until here. When the market will move up here, then we are stop out, but we were able to make a big chunk of income. As the market went here, it tries to, you can see that a squeeze, right? The market was flat all the way up to here. There are a lot of movement that is happening. Squeeze, this is squeeze, squeeze, look at the squeeze, and you can see parabolic star on top, so sell entry. So the good portion is right here, but we have to wait for the retest. So one, this is a variation of, this is also a reversal, one in pattern, one, two, head and shoulder, yeah, in pattern, this is the in pattern. So too small to recognize. Mm, come on, in pattern. Right here, in pattern. And this head and shoulder, head, the shoulder, and the neckline right here. Neckline, that's the neckline. But if I'm going to attack this one, I'm going to attack this in low tree location, which is back up by this entry, Bollinger Band percentage. It's angling down, so this is really a good location for selling. As the market move here, this is oversold already, this location. So we are going to what? Look for entry for buy here. The market went up. So that's how Bollinger Band percentage is useful in going to attack the market, as well as we will know how the market is, the signals with the squeeze and the bulging, because squeeze is usually the beginning of the trend, and the bulging is on top of the bulging is usually the ending of the trend. It means that there is a high volatility. So I'm pretty sure I've shared all the in the Bollinger Band, and I'm going to go to my platform because I'm going to share you with the price rate of change, wherein we can hold our, our long entry. We'll not be changing it to any, we will not change our position until the price rate of change give us the signal to change. All right, I'm going to share my screen with, where is that? Stone. This is, we are talking about GBP USD. You can see here I use price rate of change instead of Bollinger Band. As you can see it here, very clear, there's a squeeze. I'm going to increase my screen. You can see this location right here, momentum of this one making an M pattern. This is H1. So this is a reversal in this location. It could be that in H1 it will be reversing up to this point because this is the breakout point. So most probably it will be touching it here, will pull back, and the market will go up. So as you can see it here, before the reversal, you can see here that pattern touches it and move down. You can see upper portion of the Bollinger is good entry location for selling. And if you're going to check all this, you can check many trend lines. See that one? H low 1, low 2, low 3. So this is the first attempt of the bear in a bigger picture, second, and the third attempt. Good signal as well. You can see that the rate of change is above the this location, not 1.00, meaning to say when we are going to use the rate of change, if the market will be playing around this area, 0, you can see that 0. If the market will be playing in this area, let me draw it here. making lower high, lower high. So it's not wise to uh, buy. It's really good for to look for sell entry. But on Monday, if it try to test this area, so we will expect many whips so that will be happening right here. So we must be very careful because the market might be playing around right here. So meaning to say it will be ranging. So I expect it will be ranging before it. So as well as the Bollinger Band, it will have a squeeze in this location. And when the Bollinger Band, when the price rate of change will be making higher high, lower low, higher high, lower low. And so I'll be looking for a sell entry here. And probably I'll be looking for a long entry here if this support will not be broken up to this location. So I'll be watching this location because um, I need this area to be violated before I'll be looking for a selling entry, right? So let's change to using Ichimoku for our reversal. I'm almost 1 hour. So I'll be changing to Ichimoku for reversal. So I'll be stopping my screen and I'll be using my other platform. Now I'm going to remove Bollinger Band. And we'll focus with Ichimoku. Yeah. With the price rate of change, I'm going to, where's my price rate of change? In this platform, comma is used to be used because on the other C traders, it will be plotted in a different way. I'm going to introduce also comma on how to use it in TE platform. It's very nice to use because if you can, I'll be introducing it later. So we're looking at Euro USD and I'll be using the two indicator. I will remove comma first. I'll be using price rate of change. Use my price rate of change I have it here. Probably it's just rate of change. Just for a while. I'm looking for my rate of change. Yeah, this is the rate of change. All right, so I will change it to 20 most probably. Let me check my yeah, yeah, 20 moving average with my rate of change. So the period is 20. As you can see it here, we should not be in daily. You can see that one, this is a 0 in rate of change. So it's really good to be looking on long entry. And as the market try to test this area, this is a clear W pattern in this location. This is a W pattern, right? W, W, W. So it's really a good entry for long position in this area. And there's a fallback and W again happen. So when the W pattern will be forming, we'll be looking for a buy entry. So that's how significant the W pattern. And we can see it here that the market was moving upward, pullback, and it moves upward. So I expect for a pullback here, probably here, and then here, the last pullback will be here if the market can break this area. So the bias is changed. So I'll be looking for sell entry, and it should be back up with our rate of change. And in Ichimoku, if we are going to look at the Chico, when the Chico is very far away from our Tinkan or Kijun, it will tend to go back to Tinkan. Look at what happened here. When the Chico is far away from Tinkan, it will tend to go back to Tinkan as the price is trying to test. You can see here that it is testing our Tenkan right here and Kijun. So because this is short term, mid term, long term, so it will be pulling. So if we can see it here, a pullback into this location, and usually the pullback will happen in from here. If we're going to mark Fibonacci, it usually will be around 50 or 38. See it? 38, 20, 50. So this is the pullback. So we can also use our Fibonacci, and we can see this an impulsive move, this corrective, and we will watch out this Fibonacci line here. When it will test, and if it cannot break this one, meaning to say we'll be looking for a buy entry. So this is how it is also useful to master our Fibonacci tool on how to look for an entry in long entry. So I discuss everything with the reversal. So our reversal will be making an M pattern in long, and when you expect for a major trend reversal in bear, you can see an M pattern, head and shoulder, or double tap, and then you can draw a trend line. It will be tested for 1, 2, 3. That's a good entry, and it will make lower high, lower low, lower high, lower low, and you can see their N wave is forming, or ABC pattern, A, B, C, D, A, B, C, D, A, B, C, D. And if you're going to count in the N wave pattern, the movement, usually the reversal will happen in 3 movement, 3 waves, or 5 waves, 7 waves, or 9 waves. As we are going to check it here, this is the first wave. 1, 2, 3, 4, 5, 6, 7, 8, 9. So I would expect for a reversal here, maybe short term. If it can break this area, I can see reversal for midterm. And if this can break this area, I can say there is a reversal for long term in this cloud, in Ichimoku. So as well as you can see here that the Chico is still above the trend line. So I will wait for a 3 crosses before I will look for entry for reversal. So we will just like for in this location, I will mark the crosses here before the reversal went out. First, there is a Kijun, Tinkan Kijun crosses. This one, did you see that one? The second is, You can see this one. There's a cross of the line price of the Chico. So this is a good reversal. And this one, Como break. So as you can see it here, there were a lot of crosses. Tinkan cross, Kijun cross, 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 Chico cross, price cross. So in this location, never really look for a selling long-term entry in this location. Maybe you can have short-term, this one, short-term, even mid-term did not happen right here. So you can see that the Chico is above the price. So never really look for a short entry for long-term. You can sell for short-term or mid-term, but as you can see here, the price we're not able to break the support and resistance dynamic with Kijun and Tinkan. So it's stupid to look for a selling entry in this formation. So this is a good example. As you can see it here, the price is pretty strong up. You can see vertical movement over the Chico, Tinkan, and that one. So in this location, I will not be selling or be looking for a selling entry unless I can see a cross of the price. First order is cross of Tinkan to Kijun, which we will look at here. We'll try to look here if we can see on the left side of our market. Yeah, just like this. So I'll be looking for entry if the price will close like this. You can see that one. That one. So I'll be looking for a Kijun cross. And certainly there is a Como break. As well as Chico break the Como. So as a whole, this area is a good entry for selling. You can see it here, respecting the Tinkan, before there is a W pattern that is forming here. You can attack it here, but still it is selling entry because there is a cloud as a resistance. So that's why the market went down, because of this cloud. You can see there's another cross. Price has crossed down. See that one? Although here it tries to break, Chico tried, but Chico failed in this one. That's why the price went down all the way down here. So price is moving up, moving out, moving up, moving down. So it's not really good trending down here until the price, you can see this, cross of the Chico. There is a break of, there is a cross. So this portion is a good entry for long. But in this case, so we can see this is a large corrective structure. And you can see here support. The Chico is moving around that area. And you can see this is the nice trending location. As the market will move up, we can see Chico is angled up, Tinkan is angled up, and the Kijun is angled up. Not only that one, this one, you can see it's angled up. So in long term, Euro USD is still bullish. Maybe in other lower time frame, it will be playing around. It will has its own trend. It will be moving down and moving up. But in the lower, in daily and 4 hours, let me check on 4 hours. Come on. See, even in 4 hours, you can see in 4 hours probably there is a reversal that will happen. So I will wait for a cross of the Tinkan. Let me have a picture of this one. Then we will draw it on my so that I can draw before I will end my webinar today. We'll do some interesting. You can see it here that it is almost crossing the zero level on our price rate of change. So if it will cross down, we can check, we can look for selling entry for in the 4 hour time frame, but not in daily. See this one? So when the Chico, first we'll be looking for a, you see this is what color? Blue. So pigeon, if the Tinkan will move right here and pigeon will be break like that, and the next order will be that Chico will be crossing this one and it will be holding like this, will be breaking this one. So I will be looking for a sell entry when this one will cross this one. Probably it will be moving like that, as well as the Pigeon will be moving like that, and there is no crosses. It will be moved like that, and this one moving like that. And when there is a Chico break right here, then you can see here a or reforming like that, and the Tinkan will be testing that one, and it will be angled down one. It will be testing as well as in this resistance. Probably the Chico will be moving like this, testing that one. So I'll be looking for a sell entry in this location here. Cloud here, you can see clear. There is most probably the cloud is this cloud is also angled down, and the this one, the span B, will have and will be crossed by span A. So that is really a good selling opportunity in this location. So when the H4 will do like that, will be always looking for a sell entry, and the cloud will be angled down. We can see um, Chico will be lining out. So Chico, that's a strong momentum when Chico will be forming like that. Plus our Tinkan will be forming like that. And our Kijun forming like that. And our span B and A are trending downward as well. So never look really for a buy entry in that location unless the price rate of change will be on each at the oversold territory. Then we can check buy entry. At the same time, when the Chico is far away from the Tenkan, we can look for an entry for a buy entry. So because what will happen when Chico is far away from Tinkan, it will try to go back to the Tinkan, go back to Kitchen, and go back to Como Cloud. And it will, if it keeps breaking up, so I could therefore say that there is a reversal that is happening. So I would like to remind you that M patterns is a good reversal for bear. W pattern is good reversal for buy, and with double support or triple support, head, inverted head and shoulder, and on the opposing side, as the market is going up, you can see head and shoulder on top, or triple top, or double top with the M pattern. That's a good sign of reversal. But it should be checked by our Bollinger as well, and with our Ichimoku, with the rate of change. When the rate of change is somewhere right here, as what happened right here, you can see that our rate of change is, there is a diverge, right? So meaning to say, I could therefore say that there is, when it create a lower high right here, so most probably what will happen on Monday, if it forms like that, so I will look for an entry when the price will touch that area and candlestick will form like morning star, uh, form like this. No, it's not so clear. There's a candle forming right here, then morning star. So I will look for short entry because candlestick pattern is the most reactive. So I will be looking for a short entry in this formation. So I'll be selling here, stop loss right here, all the way down until I can see a reversal will be happening. So thank you so much for following my webinar every Sunday. And if you like my webinar, you can subscribe to my YouTube channel as well. You can share and you can like my channel. So I'm not looking for a monetary return from you guys. My intention is really to help you in understanding, and by sharing what I know, it could also improve my ability to trade forex. It will wire my brain um, concretely and strongly. So thank you so much. Happy Sunday to everybody, and to my uh, Islam brothers, Salam Alaikum, and they are celebrating the Eid presently. So um, I also like to greet them happy Eid, and take care everybody, and I hope that you will be following my channels, and uh, you will be excited for every Sunday webinar that I'll be having. So anyway, if you cannot watch live, I'll be posting this to our group, and you will. I know for sure you'll be learning from what I'm talking today. It takes really an hour for our webinar. Probably in the next upcoming webinar that we have, I'll make it sure that it will be 15 minutes. And what we are going to do is we'll be doing like mastering trend lines, mastering ascending channels. Then I will teach you how to practice it on our trading view, so that we can move from one skills to another. So thank you so much. Have a wonderful day. Take care, everybody, and stay safe all the time. Bye for now. Did I share my screen? I was not able to share it anyway. Sorry for that. I was not able to share my screen, but I will just repeat it for the next webinar. I was not able to share my screen when I show you on the Ichimoku. Sorry for that. I should be mindful of sharing all my screen all the time when I'm having a webinar. So I need to double check it. Anyway, I can master it on how to present next time. That I should be mindful on of sharing my screen all the time. So thank you so much, and bye for now.